It is my honor and pleasure to now invite the keynote speaker for the day, Mr. Srinivasan Nagarajan, Managing Director and Head of Asia at CDC. CDC is UK government's development finance institution with a mission to help solve the biggest global development challenges by investing patient, flexible capital to support private sector growth and innovation. Srini joined CDC in 2013 to lead the Asia team under CDC's new investment strategy. He has been instrumental in building a high-quality portfolio in the region, which focuses on both equity and debt. Under his leadership, the team has made successful investments in sectors such as financial services, healthcare, and renewable energy. His role includes support in origination, execution, and management of the portfolio for delivering development goals and value. The team is also pioneering initiatives in South-South cooperation, and Srini is leading a regionalization effort to build a more capacity in India. Let me please invite Srini to share a few words with us now.
Thank you, Neha. I hope you can hear me. Can you hear me well?
Yes, we can.
Thank you. Thank you for the opportunity to IIC to speak to the group. It's my pleasure to be here, and impact is such a close, is actually a topic very close to our heart in CDC. And so CDC stroke BII, as what we're going to be called, British International Investment from the 4th of April 22, is the world's oldest DFI and has been present in Asia, particularly in India, over the last 30 years plus. And we have always combined our development impact objectives with our commercial objectives to build business and on their journey towards long-term success, really. We do not put our commercial objectives ahead of our developmental goals. So developmental goals is perhaps at the center of what we do. So this particular topic, I think I committed to both Ramraj and Neha to do because it's a topic very close to our heart, and impact is something which we live with every day, really. So I'm Srini, I head Asia for CDC, which includes South Asia, all the SAARC countries and Myanmar, and prospectively Southeast Asian countries as well as we expand into that region, really. CDC has recently become a part of IIC, and we are excited to be on this journey of impact investing with IIC, especially given that we have been investing in India for more than 3 decades, as I said earlier. If you look at the concept of development impact, it's come a long way in India over the last, I remember speaking about ESG around 20 years back it was a relatively new concept, and it was not a part of everyone's agenda. And today, India is transforming it in its journey to attract global investors. And most international LPs are quite committed to climate and sustainability. So as a result, we can genuinely see the whole environment around us moving towards the climate and the sustainability agenda. This is a very welcome change, and this is a part of everyone's agenda today. That's exactly what the whole world of impact investing moving to commercial investing would like to do as they start crowding in more and more capital. And I think, firstly, as CDC, we've come a long way in how we think about impact measurement and management. We have transitioned from just a risk-based approach on impact to using sophisticated global frameworks, such as operating principles for impact management and framework and IMP to consistently have impact consideration across our investment cycle. In 2012, we introduced a very simple impact measurement graph where we measured ourselves against jobs created, especially in the world's hardest geographies. And part of the reason we really confined CDC to South Asia and Africa, where 1/3 of the poor people live. And I think what we have done over a period of time is to push the boundaries. And I think as we start pushing the boundaries, we recognize that our capital remains more and more additive, as we are very sensitive as an institution to crowding out private capital, and that's not our role as a TFI. So with our new strategy in 22-26, we have introduced a new sophisticated framework to invest in productive, sustainable, and inclusive businesses, which incentivizes the team to start using this framing to originate transaction to achieve our DI goals. And it is a portfolio level tool which helps us monitor how impactful we are, really. It's truly embedded in our decision making. right from strategy to exits, which helps us to be a differentiated investor. So this helps us to keep our addressable market more focused and also not crowd out private capital, like I said earlier. I think as an institution, we measure our additionality both through capital and value to make sure that our capital remains quite differentiated with our investee companies. Let me explain what the three pillars are based on which we try and measure it. One is productive, other one is sustainable, other one is inclusive. So what is productive? Productive is about raising the productivity of an economy so that it can support a decent standard of living, building economies of scale, reducing the cost of services, improving the realizations. Sustainability is help transform the economy to reduce emissions, protect the environment, and adapt to climate change, to the changing climate. Inclusive is about sharing the benefits of higher productivity and greater sustainability with poor and marginalized sections. Actually, we recently did a study where with more than 3,500 stakeholders across 25 of our portfolio companies and found that our investments are reaching 30% of low income people. That was quite nice for us to see. Even our remuneration framework is also linked to our impact scoring. So it truly shows our journey that we are all in terms of advancement of impact measurement and management. And we take this very seriously. It's not a frivolous stick in the box for us, really. Secondly, I think it is a need or they are that we need to bolster the gender impact across stakeholder levels as shareholders, leadership, customers, other beneficiaries. So in India, we as impact investors can create significant opportunities to develop women leaders, invest in women-led businesses and invest in businesses which disproportionately impact women. So we at CDC continue to strengthen our approach to gender and diversity finance. We are already a leader in the field of investing for women empowerment, and we have set a new target of 25% of all our new investments to qualify under the 2X challenge. So we are supporting, in addition, we are supporting WinPE in India, who endeavor to bring in women in boards and advisory roles, replicating the model of Boardroom Africa. We're trying to do what whether we could start a Boardroom Asia in India to start with. Now, I think the third is about the economic cost of climate change in India will be significant. And I think we are seeing this every day. So DFIs like CDC have a strategy which has got three building blocks which align our activities and investments, which are Paris aligned. One is the net zero by 2050. Investing for a net zero world, because investment decisions, what we take today will have effect on the emissions tomorrow. In fact, all of us are working through a carbon budget and taking much more serious calls of what we need to do. Just transition, which is supporting transition into a net zero economy by keeping the decent jobs and skill development at the forefront of what we do. Indian coal industry, as you know, provides more than 1 million jobs, much more than that actually, both directly and indirectly. And they are relatively less developed parts of the country as well. Third one is adaptation and resilience, strengthening adaptation and resilience of sectors, communities, businesses, and people to effect the climate change. Over the next 5 years, we have now committed 30% of our new commitments by value will be in climate change. And as we aim to have a portfolio to be net zero emission by 2050, we have also committed $1 billion in India over the next 3 to 5 years. And our capital will be much more catalytic in nature, for example, pre-construction, which will help mobilize a third-party capital from longer-term funds in the country who are looking for more steady cash flows. We will not only look to invest in renewables, but also on projects which are into adaptation and mitigation and support the just transition to a net zero economy in the country. I must cite an example. Between the period 2013 and 17, we evaluated a number of opportunities to support the renewable sector. And however, we quickly realized that the deals which we are looking at will not achieve the additionality or the development impact to meet CDC's mandates, as existing projects typically concentrated in the more developed Western and Southern states, and as opposed to the North and the Eastern states, which suffer from high power deficit. And in addition, we wanted to build a platform that conforms to our BI and AML standards, really. As a result of which, we started our own platform, which is quite unique in CDC, called IANA. So CDC's first fully owned a greenfield renewable platform to address the challenges of power, especially in the underserved states of India. And so we brought in a world-class management team and a formidable board and committed $100 million of capital. Over the last 3 to 4 years, the platform has achieved 3.6 gigawatt, which is both under development and operation, predominantly in the A and B states of India, which we call as the Northeast and the central part of India, and attracted third-party investors and mobilized around $500 million of third-party capital, both from Government of India and Lightsource BP through as investors, which came through GGF. I think what this really helped us to show is that demonstrating to the market that a successful platform built with high governance standards and underdeveloped region is capable of attracting third-party capital. So IONA is well to building around 10 gigawatt by 2025. So I think this is a formidable story of something which we created from scratch, building capacity. We also built a skill development center wherein IONA, in partnership with FCDO and other partners, implemented a skill for solarized future program as a market-driven skill development solution for unemployment youth in around Anantapuram, where the park is really, with a clear focus on women. And a lot of women were trained so that they could find job opportunities in the upcoming sector. We are replicating this in the other centers, for example, in Bikaner in Rajasthan as well, really. So I think creating successful, well-run platform is number one for impact, so that the governance challenges are not there. The other one, which I really would like to share with you, is about iMerit, really. iMerit is an artificial intelligence or data labeling company headquartered in West Bengal, with top US corporates as customers projected to, it's created around 4,000 jobs. And these jobs are incredibly rare. 80% of the people are below the poverty line, 91% in the backward states of India, including Bhutan, and situated in the underserved locations of the states. So 52% are women employees. So I think there is, I think one of the biggest challenges in most of the B2B businesses in India, including the new age one, is about making sure that there is adequate training, and skilling is a very important part. So this company started a skilling center, and which we helped them strengthen substantially, called Anudeep, which served as an entry point. And on the gender side, I think we made sure that several gender-related initiatives we also put in place, including adaptation of best practices on safeguarding. And of course, during COVID, they had to put in place IT system to set the company up for scale, including a support to the remote workforce. I mean, it's amazing to see people standing on rooftops because they could not get on top of the trees because they could not get the bandwidth. And the level of commitment which this company showed during the whole pandemic, and the employees, the level of commitment they showed, it's extraordinary. I mean, it's just, it's eye-popping for me, really, when I watched it. The third company which I wanted to share very quickly was about Ecom Express, which is a logistics company and distribution center. And we are working with them in terms of making sure that there is much more female representation in the workforce. And of course, to reduce the GHG emission, we're working on EVs with them, and also safe working conditions for drivers while reducing accidents and fatalities, plus expansion into South Asia, Bangladesh market, which we are very familiar with. Big Basket is, of course, one of those, everyone knows about it. Some of you might be using it as well. But we have been working a lot with the back-end farmers, which is in excess of 10,000. So half of these farmer suppliers can be considered marginalized smallholders, which less than 2 hectares. So they've been one of the largest job creators. Ecom is around 40,000, and this is around 30,000 jobs. Here we did farmer training, organic produce, increasing the realizations in the hands of producers, and conducting workshop to train the farmers on organic training, and also support the transition into EV, which is of course something which we want to do. If you look at the sum and substance of it, I think you need a solid value creation strategy when you get into investments. Passive is not impact investing. Active investment, which is much more complementary to the core investment thesis to the management team, is very critical. If you look at the world today, I mean, as I said earlier, there are 2-3 things which people are looking at in terms of impact. One is skilling. I mean, if you look at the B2B, even on the tech side, we have supported few of them through our funds and some directly. There is no problem in demand. The problem is on the supply. Unless you organize the supply, you can't meet the demand. The demand is endless. On the supply side, you need to make sure that you're able to get those people stickier to you, And whilst you achieve your development objectives, the company gets much more and the suppliers get much more stickier to each other. And of course, financing is an important part, which given our multiple forms of financing, right from debt, equity, mezzanine, risk sharing, trade finance products, given our balance sheet nature, we play across the spectrum. And I think more than anything, you cannot create impact unless you're a longer term investor. So in substance, I wanted to conclude by saying that thinking about impact we create in investments is critical for any medium to long term investor in this country, and need not only be attributed to impact investor group. As responsible investors, all of us have a role to play in environment, gender, job quality, skilling, because they all matter to a developing country like India. Even new age company, as I said, are very focused on this area and very keen to pursue this wider agenda. As investors, we have to stand in the forefront of these objectives and make sure that we don't need a separate category of impact investor. And this gets embedded in our core values. Ultimate destination of CDC is to make ourselves extinct, in which case we have achieved our objectives when we exited Singapore in 1970s. Thank you so much for the opportunity to IIC, and I hope that helped.